So our next speakers are from Secured Finance. Very exciting. You might have seen them on stage at the PL Summit on Monday with a couple of big announcements. They're going to hop into their deep dive today.
It's not working.
Okay. Hello, everyone. Hello, Istanbul. My name is Kenji, head of market at the Secured Finance. I'm really glad to be here as part of LabWeek, and thanks for joining the DeFi event as well as Secured Finance deep dive session. Today, I want to briefly introduce ourselves, and I want to show our platform as well as what we can offer with using our platform. And finally, I may invite Masa to the stage to explain what the roadmap will be and two big announcements. Here's our team. We are currently 10 of us, including founder and CEO Masa. He's a hybrid guy between the computer science, and also he had an experience of head of market, derivative market in HSBC in the past. And I'm Kenji. I started my career back in 2004 at Goldman Sachs as an FX forward trader. Since then, I spent 14 years there as a market maker, not only FX, but also interest rate and derivatives. And then I moved to the hedge fund called Capilla, which is one of the biggest fixed income hedge fund. I think it's over $20 billion worth on asset under management. And I engaged for the portfolio management there for 3 years. And during that era, I met with Masa. I got introduced from my best friend, and his passion to bring the yield curve into crypto world. I get inspired with his vision and decided to jump into the Secured Finance. I started working here in 22 January. Ruben he has experience over a decade in HSBC, creating the trading terminal in HSBC. And Key is a UI UX designer who has experience in Morgan Stanley and Goldman Sachs as well. And Aki, who is a smart contract developer. He used to work in Accenture as well as a Securitize. And one notable thing for him is that he's the earliest adopter of IPFS. He started using and learning from back in 2015. So, his knowledge about Web3 and IPFS is a notable thing. And Timo, as you might know, he's our community lead, and he's a talented guy, not only in communication, but also the language. So he is not only bilingual, but trilingual or quadlingual or whatever, I don't know. So please say hello to him when you find him in your own language, please. And so out of 10 out of 7, including Masa, is a developer, but I'm sorry, I'm not. I'm an expert of financing. So, if you want to have question for more developer side, you can come to Masa or our documentation. Anyways, and let me go to the next slide. So, before explaining what we want to deliver, let me explain briefly about the retail, the current banking system business model. So the TradFi banking face two markets. One is retail market, the other is interbank market. And their business model, the most profitable, how do they make money is a retail model with a big bid and offer spread. Let's say the easiest example I come up with is that when you fly into the Istanbul, you try to exchange your currency into Turkish lira. and you get shocked with high margin, like a 5% to 7%, right? And that is the profit source for the traditional banking system. And that's, let's say, 5% different from TradingView or Bloomberg or whatever you notice. And you get shocked again when you fly back to your country. Because when you buy it, you paid 7%. Again, you try to sell the real back in your currency, you get charged another 7%, right? That's how they make money. On the other hand, they have another market called interbank, which is very limited during the banking system. And only like a small big tech company or big corporation can reach into this interbank market. And the rate you see on Bloomberg Terminal or TradingView is the rate of interbank market. And this is the example of FX, but same happening in the rate market as well. For example, you deposit your money into the bank A, you earn 3%. And banks, what they do is aggregate all the deposit and invest to somewhere else, or lend out to the corporation by like 7% or 10% to make a spread. Or, lend out the money to someone for the mortgage loan anyways. And on the other hand, they also have interbank market for the interest rate as well, which is the bond trading market. They have access for the both, and so that they can hedge through the interbank. The interbank market is OTC market. So bank against bank trade each other with one rate. There's no spread. Peer-to-peer, so the same rate. The lender and borrower agree at the same rate. That's what's happening in the interbank. And that is what secure finance is trying to achieve in DeFi. Okay, next slide, please. I want to touch upon a little bit of a DeFi landscape currently. So the pool system, many staking project or even like spot, the many projects rely on the pool, which is one of the best invention we have in DeFi space. However, it's very similar to banking business model. What do I mean by that? The pool has own business model as well as their own formulaic and their own size of the pool and utilization ratio, so that each individual pool has a showing different rate, not only the borrowing but lending as well. Why? Because that's the model, right? And there's a limitation. And what we want to provide is between those pools, we can provide OTC transparent rate market creation so that someone can be the arbitrager or even pool to pool can connect each other. That's what we're trying to achieve. Next slide, please. So our mission: democratization, innovation, and education. So, what we want to do is evolutionizing finance to grow together. And democratization, meaning that, now interbank market is limited to the banking system or the limited big company, which we want to open for every one of us to democratize the finance. How? With the innovation. We want to make it happen with our smart contract full on-chain order book OTC market in zero coupon bond market. And finally, we focus on education. If you join for the PL Summit, Juan was mentioned about his link to the R&D, which eventually expand. Knowledge expansion will bring the innovation eventually to grow entire ecosystem bigger. So we spend our time, we spend our resource to educate entire ecosystem, which is our one mission. Now, I think you might understand what we are trying to achieve. It's a yield curve. Yield curve is basically the plot between the yield for the time series. And without this component, no financial instrument can happen. Like derivatives or whatever, even option structure, we need this yield curve to start with. So, however, now we only have the dot between the pool, and there's no composable interest rate. So that is a problem. And this is what we want to solve. And how do we want to make the yield curve? Is leveraging the zero coupon bond market. Zero coupon bond is commonly used in TradFi financial trading place, but there are no coupon payment during the lifetime, but you can buy and trade with a deep discount. So let's say when it's get maturity, you will receive the face value, but you can buy it cheaper. And eventually you will get the difference between when you buy and the face value will be your profit. So for example of this, for 365 days, 1 year, if you buy on our platform, the zero coupon bond will mature at 100. And during the lifetime, you are able to trade from 0 to 100. That's 100 is a hard limit for the price. And at the maturity comes, you can redeemable at the 100. So if you buy 80 and maturity, date to maturity is 365 days, how much is the APR? You will earn 20 against initial investment of 80, right? So one quarter, 20 divided by 80 will be your yield, APR. Go next slide, please. 1 year, rough calculation, it will be 25%. And if the maturity is half, of course, you earn much bigger within the short period of time. So if the maturity is half, your yield will be double. And if the maturity is 1 quarter, let's say 3 months, it's 4 times bigger in terms of APR. That's how the zero coupon bond works. And we are making the zero coupon bond marketplace on our platform. And next slide, please. And what you can do with the yield curve we offer. First of all, cash flow management. Needless to say for you guys, but if you are new SPs, the choice to pledge collateral for Filecoin is to buy or borrow. And you can use a platform with a fixed tenor, fixed maturity, with fixed interest rate. And if you are the existing SPs, you might be able to reduce your cost against the existing, borrowing against someone else. It could be the pool, it could be the centralized solution, or even you are borrowing with variable rate. You can fix your cash flow through our zero coupon bond market. Next slide, please. And the other thing, this is this is an example of USDC, I guess, but the yield spread with leveraging. The tenor spread, this is what I have done when I was in Goldman or even the hedge fund era. Time to time, the market moves a lot, and yield curve shows the weird shape. So that we just take the other side of the peak and the bottom, and try to make a spread between the two interest rates. Let's say if you see on our platform the 2-year USDC, you can lend out with 7%, while you can borrow 1 year with a 5%. You just do the spread between the two tenors to make the 2% difference for the annualized APR, which is good in terms of capital efficiency, because you borrow one hand and lend one hand, which you can allow, because on our platform, we receive the zero coupon bond. When you lend out, which means you buy the zero coupon bond, and we accept this zero coupon bond as a collateral if it's the same currency, so that you can use this zero coupon bond to borrow the same currency. But this is profitable only if there shows a weird spread between the two tenors. Okay, next slide, please, I guess. Yeah, and what you can do is leverage looping again and again. So if you if you start lending the USDC, let's say some money, and then borrow meaning that you get the cash on your hand again, so that you can invest again, right? And then after lending out, you will get the zero coupon bond again, so that you can use this zero coupon bond as collateral to borrow again. So you can loop and loop and loop. But there is a haircut by 20%, so you cannot do forever anyways. But yeah, our system allows the leverage system. And next slide, please. Okay, let me skip it. I actually explained already. Okay, and finally, this is a bit complicated, but what you can do is cross-currency carry trade. If you have trade the margin FX transaction, you might know the swap point. Let's say like Aussie against JPY. If you are long high yield currency, your cost of transaction is getting better and better day by day because of the yield spread. And what I am offering is pretty similar to that. So first of all, if you have like collateral like WBTC, which you don't want to sell, and meanwhile you're bullish on Filecoin, what you can do from using our platform. So pledge WBTC as a collateral and borrow USDC and get the cash. And you may go to the Uniswap to exchange from one currency to the other. Now we might use wrapped Filecoin. So let's say that wrapped Filecoin. And you come back to our platform and lend out the double fill. And if the 1 year USDC borrowing rate is 5%, while 1 year rate for the lending rate for the double fill is 12%, you earn the 7% yield difference with the carry for 1 year time. This has a risk of a spot. If the Filecoin price drops more than 7%, you might expose the loss. But what happens if Filecoin goes higher by 10%? You will earn income gain and capital gain, total like 17%. That's how carry trade works on our platform. Okay, next slide, please. Oh, I already explained this one as well. Now, is Masa around?
So hello, I'm founder of Secure Finance. Basically, we are democratizing finance, and Secure Finance is not just one DeFi. It's part of the finance history. What we provide and how we different with other DeFi projects is we are making fixed rate products. And fixed rate, what it enables is basically we can introduce time value of money into crypto. So at this moment, a lot of DeFi projects creating some pools and then, lending, that's great. And then they can offer different kinds of interest rates, but it's variable rates, right? There's no guarantee in the future. We'll bring more precise accuracy of the future prediction so that we can provide a hedging solution and a forward market and derivatives market, which is massive, massive potential. In this way, we can attract traditional capital and bring into a Filecoin ecosystem and a crypto ecosystem. This is very, very important. So if we have this fixed rate, it's a guarantee of the future, right? And then people so much care about the percentage of a yield, right? So I'm very much like a sensitive to this interest rate level, right? Like if the rate changes like a 0.1% and then 0.5%, it is massive, right? Nowadays, people don't really care about what's 16%, 20%. It's just lucky if it's borrowed just cheap, but it's in traditional money, it's a massive, right? So it's okay to borrow, the $10 million, $100 million size, but the Kenji's one-shot deal is like a $300 million. It's super massive, and they really care about the interest rate. So I want to attract the real, whale and bring this capital into this crypto economy. And in order to do this, the fixed rate is very, very important. It's very hard, and no one can do that. Even Uniswap, Aave, Compound, they all fail to make this market, even though they have a lot of cash, a lot of smart people, but it's so hard. Just because there's a lot of market dynamics has to be deployed in a smart contract. That's so hard. That's why I spent a lot of time and I hired Kenji, expert trader. The reason why Kenji is here is basically borrowing this expert trading experience and then decode into the smart contract and infrastructure so that we can onboard a lot of people to our system. So we are more like a base layer of capital markets. So I'm so happy to announce that we're going to launch on Mainnet December 15th. What it starts with is global itayose. Basically, we invite all members, all people to place the order. What is your comfortable interest rate level to borrow? Or what is your interest rate that you want to earn from the fixed term? 3 months yield, 1 year yield, 2 year yield. These should be different, right? So you can post any of of the price. And what's the beauty of the open order book system is basically it can gather all people's desire and then find out what is the best rate at this moment, borrow or lend. And this could become the public interest rate. It's a benchmark interest rate. That's how we can provide you easy access, and there's no negotiation after finding the price. So this is a global itayose, and it will take 2 weeks. And after 2 weeks later, we actually start opening at the bond market. So you can buy or sell. There's no permissionless. We want to achieve financial inclusion. So anyone, without negotiation, can just come to the platform and just, we need collateral, but by collateralizing, you can basically borrow or lend or leverage and a cross currency, and all of these traditional trading strategy can be applied here. And you can invite and transparency, and then translate it into the finance. It's becoming this secured finance. So from my point of view, from the higher abstraction layer, there's not much difference between like a Web3 infrastructure and the finance project. So so I'm so happy to see, it's next to TCP/IP, mastering TCP/IP textbook. So it's considered to be, a great protocol in Japan. So I'm so happy to share this fact. And thank you very much. And please come to our platform on December 15th. Thank you very much. Some questions?
Awesome. Great presentation. Thanks for kind of going end to end. Can you touch a little bit on
Sure.
how you think the ERC20 token, the role that would play in the platform?
Yeah. So ERC20 token it's a great standard, so everyone can take and then deploy. And we are dealing. We use a wrapped Filecoin and wrapped Bitcoin. Everything is in ERC20 base. The reason why is if it's ERC20 base, it allows interoperability with external smart contract. So we are fully on chain decentralized protocol, this means there's no off-chain part. So this means anyone can build the second layer or the aggregator project and then just move our product, connect different kind of different project. You can even connect with Uniswap or Compound and make something like a structured products, and that is possible. So by having ERC20 tokens, I think this has a lot of flexibility, and we want to add on to more stablecoin business. I know it's 2025, the Basel III, the rule will be updated. So a lot of more like a stablecoin business and a TradFi and banks will issue the ERC20 based, US dollar, Japanese yen, the euro. So we want to have this yield curve as well. In this way, we can have US dollar curve and a JPY curve, a euro curve, and a euro dollar and a euro yen, dollar yen is a very, very popular currency pair. In this way, we can provide a more advanced, forward product, FX products onto our platform. So it's a massive scale by choosing the ERC20.
Awesome.
Thank you.
Quick question for me. Do you think that the rates on the wrapped representation of tokens will differ greatly from the rates of the actual token itself?
This is called basis risks, but I think in the beginning it's kind of like ignorable because as long as it's like a wrapping and wrapping is insured, it's a one-to-one relationship, it's guaranteed, then not much of the interest difference. Yeah. So wrapped coins is basically, you have a US dollar into Hong Kong, Shanghai Bank. It's outside of the US, but you can have the same interest rates because it's guaranteed as a US dollar. So same idea. Yeah. Hi, どうぞ.
I wonder if storage provider works already with some protocol and he wants to exit this protocol. Can you provide liquidity to them to exit the protocol and to go to another protocol, maybe
Yes.
with a better percentage rate?
Yeah, this is our vision. We want to be infrastructure for the many liquidity projects,
Yes.
and who can play this this game is basically you can show a different kind of interest rate, and then we are also showing we are basically matchmaking, and then the arbitrager is a key player. Arbitrager always take a look at okay, this is cheaper, this is higher. Okay, I buy this, I just sell. And this way we can averaging the all markets. So in this way we can grow together, and then the more ensuring more liquidity. So I think in the if you're running a project by your own and nobody else, it's really hard to ensure the liquidity. But if you are grow as an industry level, you can exchange liquidity each other, right? So each project had their own strengths, and so maybe I think it's really important to think about the collaborative approach and how you can utilize it. This is actually what's happening in the interbank, right? And bank A, oh, I need money now. And bank B, okay, I can lend out, right? This is kind of like the cooperative approach to ensure the liquidity in the finance market. Okay. Yes.
The capital markets is highly regulated sector, right?
Yeah.
And I think we're talking about cross-border transactions as well, right?
Yeah, true.
How we will capture that in, or would it attract future scrutiny?
Yeah, so it's cross-border nature, and the regulatory issue is also a very big topic. And our network is basically we consider this market as a euro currency market. Euro currency market is not the currency of euro; it's basically offshore currency. So our protocol is operated by the Cayman Foundation, and also so think about it. If you have US dollar and then bring outside of the US, and what's happening outside of US, you can just lend out the US dollar outside of US, no regulation. This is a choice of the interbank. So even like a JP Morgan, Goldman Sachs, they're using the offshore entity to lend out the US dollar outside of US. This is called offshore market. And that's the reason why it's the most effective. And they're going to use like mathematical formula model, because if humans is interrupted, and then some like a political thing can affect to the interest rates, which is not efficient, right? We need more like a base layer, right? We want to cancel out all the human thing. We want to just purely grab the pure value of the currency or of the interest rate. This is how we build the offshore market. And then after this, we can bring this market into onshore so that we can distribute our product or interest rate to the local retail people via regulated entity. So we're happy with working with regulated, licensed, and onshore entity. So it's more like important to have the coordination between onshore entity and offshore entity. So that's how we can clear the regulatory issues. Yes.
So this is some pretty complex stuff, right? You're
Sure.
like very much in the weeds. I'm curious, one, who is your target audience? Because I know that you mentioned that you like really wanted to open this up to make it possible for anybody to
Financial inclusion, yeah.
Exactly. But
Yeah.
curious, like, are you targeting a specific segment?
Yeah.
And then secondly, what efforts do you guys have in terms of general market education that you are really working on pushing?
Yeah. So, we want to cover all the users, but I think the initial user would be, of course, Filecoin storage provider, but also high net worth individual or like a hedge funds, because they're chasing for a new alpha and new like a profit source. So cryptocurrency is very interesting nature, right? There's a low correlation with the thing. So those are the initial target, and they're looking for the kind of like a native market. They want to have a direct access to the interbank market, which is not possible at this moment, right? Interbank market is a very closed network, and then they only talk to the bank or brokers, and then they charge a lot of fees, right? They don't want to pay, and they just want to go to the direct market. So that's why we can, I think we can reduce the friction, or we can ensure the high liquidity. But it comes with a lot of education and experience, because those kind of interbank grade market is like a major league, right? you're so afraid of getting into the major league to play baseball. So you want to have a proper education. And that's why we provide test pilot program, V1, V2, V3, so that you can go through all the necessary education. And also at V3, we educate people to experience the extreme situation. Okay, if the market collapses, if something happens, if nuclear war happens, what's going to happen, right? People are so afraid of something happens. So okay, let's assume something critical thing happen, and what's going to happen, right? We experience all this. It's like a fire drill. And then, okay, so we stop the market, and then everyone has a present value, right? We can cancel out all, and then we can flatten all the position, and then we can restart from the global itayose. By having this like a special like education and training, you have the confidence to start new and then start taking a new position and then get into this thing. So I think education is really key. So it's not the all. So we keep educating, and we are incentivize salespeople who is good at like a narrative and token to the like storage providers, right? So we would incentivize that marketing people or salespeople to to tell and then create a solution to the retail people. So in this way, we can, I think, bring more liquidity instead of just asking everyone to touch directly to the market. So it's kind of like a replication of what's happening in a TradFi situation. It's always like a trading team and a sales team. So we want to replicate this like a whole ecosystem in our secure finance network. Thank you. Any question?
Alrighty.
All right.
Thank you so much.
Thank you very much. Thank you.